All right, we are live. Let's go ahead and get started. Today, we're going to be talking about material participation, kind of a next segue of what we've been talking about last week with how do you qualify as a real estate professional? How do you take advantage of the strategy and how you can lower your tax bill using this strategy? And we want to talk about the next most important thing here, materially participating in your actual rental properties. Because as we stated last week, you need both of those, right? You need to qualify as a real estate pro, and I also need to materially participate. So we're going to be breaking down in this video, we're going to be breaking down how the IRS defines material participation, what are the 7 different tests of that, which ones you're probably most likely to use, how to track and document your material participation. We're going to be kind of showing you a couple tips and tricks too, not just the, hey, what does this look like from knowledge from your CPA, not just the paper side, right? We want to show you, what does this look like in real life? What's the easiest way to do this? How can I just make this easy on myself, but still make sure that I'm, crossing all my T's and dotting all my I's. And then we're going to just be going back over how to maximize an active real estate approach to eliminate your tax bill. So kind of wrapping it all back to what you're going to do as a real estate professional, how you're going to materially participate, and how you're going to make this work on the back end in actually reducing your tax bill. So Let's go ahead and jump in. Matt, you want to start going over how the IRS defines material participation?
Absolutely. They have 7 tests in total. And these are just different ways that they would view a business that you have materially participated in. So it's the distinction between a passive business and an active or non-passive business, as they call it. So 7 tests, we'll go over each of them. I'm going to do a little bit of back and forth on it. We can explain them out. Not all of them apply to real estate, but this is the way that somebody who follows the short-term rental loophole or somebody who is materially participating as a real estate professional is able to qualify for the tax benefits associated with it. So first one is you materially participated in a trade or business activity for a tax year if you satisfy any of the following tests. I'm reading this directly from the IRS publication 925. Test number 1, you participated in the activity for more than 500 hours. That's over the course of a year. 500 hours of participation in the activity. So that's in the activity of rental real estate. Now, they have ways that you are able to group properties so that you have, it's not necessarily 500 hours in each property. Although if you fail to group your properties, you don't elect, it's an election that has to be made when you file taxes. If you fail to elect to group those properties, then you would have to prove material participation in each rental for that to count for you. So just a quick note.
That portion of like grouping your properties, really important to talk to your CPA about that and actually getting them grouped, because in a lot of the audits that we've read, that's a big reason why a lot of people fail is they didn't properly group their properties, and they spent the hours, but they didn't spend the hours in a grouped participation form. And now the property that they actually took the depreciation on, they're out of luck.
Yeah, and so it's really just like a matter of checking a box. Like you're saying, yes, I want to group these activities, and if as simple as that is, that's a gotcha for the IRS if they're coming in for an audit. So something you want to make sure you do. So material participation, satisfy the test if you participate in the activity for more than 500 hours,
and that's 10 hours a week.
Roughly 10 hours a week. Now, I'm gonna hit on just a side note that's further down in the publication that is super critical as we explore what this material participation looks like, though, and that is the fact that your spouse's participation counts. So directly word for word, I just want to read it because it's super critical. It says your participation in an activity includes your spouse's participation. So
not just your either or,
right?
Both.
It includes
together.
both. Yeah. So if you have 49 hours and they have 451 hours to meet the 500, whatever that math is, then that would count. It is your combined hours, and it says this applies even if your spouse didn't own any interest in the activity and you and your spouse don't file a joint return. So it is possible to group those activities regardless of those two things. So spousal involvement in that does count, and it can be critical. So make sure that if that's going on, that we document that, and that in the event of an audit, that's something that can be shared with an IRS agent. Second test, your participation was substantially all the participation in the activity of all individuals for the tax year, including the participation of individuals who don't or didn't own any interest in the activity. So this one says if you did all of it, then you have materially participated. It doesn't list in hours. There's a test number 7 that does say, hey, this needs to be at least 100 hours. And I think the play it safe mark is, hey, let's make sure that there are hours involved. But this kind of swings in for the person who purchases the property and puts it into service at the end of the year, where, hey, I don't have time to actually participate for 100 full hours or 500 full hours to meet this material participation requirement, but I've done all of the work, every bit of it, leading up to putting this thing into service. And so that's a way that you can still count that year as having material participated in that property.
Yep.
So those are the first 2. Number 3, you materially participated if you participated in the activity for more than 100 hours during the tax year, and you participated at least as much as any other individual, including individuals who didn't own any interest in the activity for the year. So this one can get a little bit tricky. What happens if I have contractors on site? What happens if I hire a general contractor to do a bunch of remodel work and they actually spend a lot of time in the property? That's something that could be juggled. We'll go over it a little bit more when we talk about specific activities we track. But that's one stipulation there. We got to be a little bit careful of.
100 minimum, more than anybody else.
Exactly. 100 hours and more than anybody else. Any individual, any other individual, it's specific. So just a thing to know. Number 4, the activity is a significant participation activity, and you participated in all significant participation activities for more than 500 hours. Significant participation activity is any trade or business activity in which you participated for more than 100 hours during the year and in which you didn't materially participate under any of the material participation tests other than this test. And so there's kind of a grouping of hours that's happening here amongst multiple types of businesses. Not one that people like to get caught up in the weeds on. In fact, most videos that you're going to see online on this topic are going to list tests 1, 2, 1, 3. Yeah, there you go. 1, 3, and
maybe 7, right?
Maybe, but that's kind of a weird one too. So 1 and 3 are kind of the big ones. This one gets a little tricky, but the rules are there. They're clearly stated. And so 500 hours and more than 100 hours in this particular activity, and you don't pass material participation tests in the others, what it says. Test number 5. Again, these don't all qualify somebody specifically, don't all have to do with real estate. It can be any non-active, any passive types of income. So you're bringing in royalties from previous work, you're getting consulting fees from stuff that you've done, you're selling a course online. There's some extra stuff where, like, hey, this isn't active anymore, but when does it still count as active? And so that's where the clarification is here. So number 5, you materially participated in the activity other than by meeting this 5th tests for any 5, whether or not consecutive, of the 10 immediately preceding tax years. So 5 of any of the last 10 years. Now this is super, super helpful for the individual that wants to scale back, right? If I'm wanting to kind of ramp down my my business as a rental business, but I'm not fully out of it, and I'm still using depreciation and losses in properties as I kind of solidify what my total portfolio looks like. It can be super valuable because I've got some time in between the time that I was active, the time that I was materially participating, and the time that I finally call it quits from the tax benefit end of it.
Yep.
Super cool. So another useful one in this next one, number 6, is where it gets a little weird. But again, I'll list it because it could be related. I want to list these all again because we don't see them listed on a lot of videos that cover the subject. And a lot of what we want to do is make sure that we're providing a good understanding of the difference between the passive and the active income. because how you approach your investment in real estate will critically depend on where your income is coming from. Are you bringing in active income from a job? Are you bringing in a lot of passive income from something else? And how does the IRS view that? And we want to make sure that we're still in compliance. We're still taking advantage of the tax savings available to us. But this is something that understanding that line is critical.
Yep.
So last one, or number 6 here. The activity is a personal service activity. So you materially participated in a trade or business activity for the year if you satisfy this test. The activity is a personal service activity in which you materially participated for any 3, whether or not consecutive, preceding tax years. An activity is a personal service activity if it involves the performance of personal services in the fields of health, including veterinary services, law, engineering, architecture, accounting, actuarial science, performing arts, consulting, or any other trade or business in which capital isn't a material income producing factor. So what I kind of point to here with this one, it seems like maybe you sold a course online, you acted in a movie or a commercial somewhere, and you're still taking in royalties, you're still taking in payments from that. That is something that, hey, if you did that for any 3 preceding years, that was what you did for income production, and you're still bringing in income from that, that counts as material participation for that type of thing. So that would bring the that type of work over to the non-passive side, which is just helpful to know for the tax purposes, right?
Yeah, not specific to like kind of our strategy here and what we're doing with real estate, but again, the IRS publication 925 isn't just about real estate.
Right.
So it's finding which of these rules apply to what we're doing.
And number 7, last one here. Based on all the facts and circumstances, you participated in the activity on a regular, continuous, and substantial basis during the year. It goes on, I'll clarify. You didn't materially participate in the activity under test 7 if you participated in the activity for 100 hours or less during the year. So it has to be 101 hours, more than 100 hours. Your participation in managing the activity doesn't count in determining whether you materially participated under this test if any person other than you received compensation for managing the activity, or any individual spent more hours during the tax year managing the activity than you did, regardless of whether the individual was compensated for the management services. So
kind of goes back to test number 3, right?
Right. Again, very, very similar. Hey, did you participate more than 100 hours, and did you participate more than anybody else?
Yeah.
Right. Same sort of thing.
And that's where most people in the industry, you'll see all sorts of videos on material participation. CPAs talking about this. It is that, right? It boils down to really two of these things, and it's 100 hours and more than anybody else, any other individual, or 500 hours. Now, for a lot of people who are just starting their portfolios, it's probably going to be 100 hours. And when you put that property in service that first year, right, you're getting it up ready for rent, you're advertising the property, you're turning things over, you're maybe doing some renovations. There's a lot that's going to be going in that's going to help you meet that 100 hours. And when you're doing a cost seg, you're going to be taking the depreciation, a bulk of the depreciation in year 1.
Yeah.
So that's a nice little way to kind of to jump on this cycle is like, okay, the year that I buy the property, I'm going to put it in service and I'm going to spend that 100 hours. It's going to take, it's going to be easy to take that 100 hours and pour that into it. And then next year, I'm going to buy another property. I'm going to group them together. But the 100 hours that I'm putting in between the two of them is probably mostly going to be spent on the new property, getting it up ready for rent, renovating it a little bit, getting it ready, advertising it, getting tenants in there, right? The property that you've already stabilized and you've already spent a lot of time on getting people in, and maybe the tenant's there and renewed a lease the second year, right? There might not be a full 100 hours there, but as long as we group those properties together, then we can share that 100-hour burden.
So kind of going back to that second test then again, when you do have contractors coming in, when you do have a concern over like who's spending more time in this property, I need to prove this. If I were to be audited by the IRS, one thing I want to be able to prove to them is, hey, I have spent more than anybody else and I've spent more than 100 hours. So let's talk through a little bit about what that looks like for contractors coming in. What are some things we can do to make sure that we have documentation on that?
Yeah, one really helpful thing is when I have a contractor go to the property, and they do work, right, and they send me an invoice, I'm going to go ahead and either respond to that invoice
Mm,
or even let them know ahead of time and say, hey, I would like to know the hours spent.
mm.
And I would like the name of the contractor, the individual doing the work, and then the number of hours that they spent doing that job.
Hmm.
You brought up a good point this morning. You've been on the other side of this, right?
I have. I've been in the HVAC industry for 15 years, and being on the other side of that, when you show up at a rental property and you have a property manager or an owner talking to you and asking these questions, instantly the guard comes up, right? Because what we're thinking is they're questioning the price. Like they're obviously going to have an objection to what I'm charging for my services. If a company's overcharging, that's on you as a company to deal with. But the point is, a lot of companies are charging differently than an hourly rate. They're charging based on a flat rate where they're factoring everything in. They're factoring the travel, they're factoring the time spent learning and training and all of that, the time between calls, the potential for a callback situation where you have to go back and address something that went wrong in the job. They're factoring all that in, they're baking it into the price, and it might not be an hourly rate that you're looking at. So as a contractor, when I've been approached with that question, instantly the guard comes up and I think, hey, why do you want to know this? This is weird. Why are you questioning my skills here?
Right.
But
Be upfront about it.
with that, yeah, if you're upfront, as you're asking that information, say, hey, I just need the name of the individual. I'm not looking for anything special here. I need to keep records for the IRS to make sure that I'm compliant with the rules here. I think a lot will be really, really on board with sharing some of that information. They won't necessarily break down, hey, I spent this many hours and the part was exactly this price or cost. That's getting really weird with pricing, and nobody likes to share that information. It
Yeah.
opens you up to weird questions, right? But for the hours situation, that's something that having that documented in an email chain can be helpful.
And much better. I mean, you're not going to get weird. You might have one conversation, and if you're using the same contractor, maybe it's a handyman, right? Like
Yeah.
you're not going to have this conversation every single time.
Right.
It may be an initial conversation that you have with new contractors that come in to do work on the property. But by doing this, you're removing yourself from the burden of proving this hour, like, right? Because when the IRS, we've looked at a bunch of audit cases, the IRS will go and say, okay, you spent 101 hours, but you also had XYZ working on the property.
There's a large renovation.
And there's no documentation on
Right.
how long they spent. And so now it's your word trying to justify that, you jumped through the hoops. Instead, just be upfront and collect this documentation as you go, right, from a third party. It's no longer you saying they spent this many hours, because that's weird in the eyes of the IRS. They're saying, well, you have incentive to tell me whatever you want to tell me, right? But when it's a third party contractor saying, hey, I worked here for 2 hours and 15 minutes, 2 hours and 30 minutes, right? Then it's very easy to just throw that in a folder for the property, keep all those logs and records, and you can add them all up and say, hey, when my handyman, let's say you had a extreme amount of things happen to the property. You got a rough tenant, right? Maybe that handyman's coming up on 75, 85 hours for the total year, right? You're saying, hey, okay, at this point, I need to probably switch to somebody else so that I'm hitting my 101 hours and he's not doing more than me. And it's not you, it's me. All right. I got to have somebody else come in here and continue the work. That's an extreme case, right? I don't know very many people spending 100 hours there, unless it's an extensive renovation in year one, but you should be spending more time either way.
Yeah, exactly. And really the only time this would become an issue is if you're really trying to ride the line of doing the absolute bare minimum in terms of hours spent. And I don't think writing that line is something that would be recommended either way, no matter who you talk to. Ourselves, we're not CPAs, but you talk to any CPA, and I think that they're going to want you to be a little more clear on making sure that you absolutely meet the rules, so that when they get questioned, it's a clear cut sort of thing.
Yeah, and kind of to piggyback off this idea here of documentation, setting up systems that are going to help you through this process. Setting up systems, it's not there just to make your life easier. In this scenario, it's making sure that you don't have to ride the line, right? Yeah. We don't want to play games with the IRS. No, we want to make sure that we're hitting everything that we need to. We have all the documentation up front. If we ever get audited, I'm fully expecting to turn over all my documentation. Here we go immediately. Like, there we go. I didn't have to go back and, try and remember what I did in October and how many hours I spent doing XYZ, right? That's when you get in trouble. Like, there was a case where a guy spent, how many hours repairing a toilet.
Yeah, it's like an 8-hour process to replace a toilet.
Yeah,
like,
that's
maybe not.
That's right. So,
or another where somebody was like, "Hey, this is literally every task takes an hour. I need to write a check. It took an hour. I need to email somebody. It took an hour. I need to."
Yeah.
This is weird.
No. So anyway, we kind of went over all the different ways that the IRS defines material participation. The two main ones that you're probably going to hit if you're starting a portfolio, it's going to be grouping properties together, and it's going to be doing 100 hours more than anybody else. As that portfolio grows, and as you might be in a different stage of your business, right? Maybe you're a business owner and you're spending a ton of hours there and you're in growth mode, but maybe you're a business owner and you're towards the end of your tenure there, right? And you've kind of pulled back yourself from the business. You have systems in place to where you spend less time there, and you have more time to go ahead and spend. Okay, or my spouse is going to spend, or the combination of us are going to spend 500 hours a year on our portfolio of rentals, right? And so once we start acquiring properties and we go to more than one or two properties, in order to go on 5, 6, 7, 8, 9, 10 properties at a time, that's going to require more of our time, and you'll be able to hit that 500-hour benchmark.
Yeah.
So let's move on to, we kind of started the segue and how to track and document material participation, some little tips and tricks. We just talked about, things that you should tell a contractor and maybe grabbing some time from them. But what are some other ways? And we want to, in this part, we want to go over what actually counts as material participation. So we know the hourly, right? We know how to meet the hours, that the amount of hours that we need. What counts as material participation in my properties now? Because there's a lot of bad information on the internet about, I went to this convention, of property management convention in Vegas, and I spent a weekend there, and I just counted all 48 hours.
There's 72 hours with the travel days.
No. That is not material participation. So Matt, break us down on what would be considered material participation, what we should steer clear of, all that.
Yeah, I want to hit on what wouldn't actually first. Hours that don't count. We're talking education and research. The time that you spend perusing YouTube for ways to do all this stuff.
Watching our video.
Watching this
doesn't count.
You can't count that as material participation in the properties.
Sorry.
The publication 925, kind of just below the material participation section, does include a little blurb that says, hey, hours spent in participation as an investor type hours don't count either. So I'll read that real quick just so we have it. You don't treat the work you do in your capacity as an investor in an activity as participation unless you're directly involved in the day-to-day management or operations of the activity. Work you do as an investor includes studying and reviewing financial statements or reports on operations of the activity, preparing or compiling summaries or analysis of the finances or operations of the activity for your own use, and monitoring the finances or operations of the activity in a non-managerial capacity. So this is all the stat tracking stuff that I love to do, just kind of a finance nerd. I love to see finance tracking. I love to see metrics. I love to read it all. That type of stuff, watching your portfolio grow, looking at the graphs, making the graphs, that kind of stuff doesn't count.
That's passive.
That's for you as an investor. You're actively working on it, but that has nothing to do with the business, the day-to-day operation. That has to do with your interest in how well your investment's growing. Right. The IRS says, hey, that's not something that counts. That's not something that qualifies under that. Yeah. Travel time. So it's one that gets a little bit tricky, but kind of general is that the IRS audit guide really just assumes that it doesn't count in a lot of cases. And I'll leave it at that. There's stipulations, but in most cases, travel to and from isn't going to count in that. But let's go over the things that do count. So showing the property for rent. If you have tenants that are interested, you show up, you show them the property. That would be something that would count. Taking tenant applications, screening tenants. We could talk about preparing and negotiating leases and contracts, writing up contracts that involve certain things for for, let's say, pet addendums, let's say how, what kind of accommodations I would have that may be ADA compliant for saying, hey, I need to modify this step up into the house and build a ramp. Make sure that you're contractually in there to make sure that you're ADA compliant, but you're also documenting it properly in the contract. All the little things that take a little bit of time, that kind of stuff can count towards materially participating. Making sure that your contract is set up appropriately and you have negotiated and filled out your leases appropriately for that tenant. Cleaning up the property, preparing for rent. So going back and painting a wall or patching a wall. Think of wall repairs. I have children that like to destroy things sometimes. So repairing things, painting, cleaning the carpets, mopping, all the stuff that you could do.
Yeah.
And some stuff you'd hire out, but these are things that could count as material participation if you want to do that time. So you spend 10 hours in between tenants, Saturday, making sure that thing is cleaned up for the next tenant. That particular work is counted as materially participating.
Yep. Now we're talking a lot of, in our minds, we're thinking, hey, the person talking about material participation right now is qualifying as a real estate professional. Think about this from the flip side too. Like if you don't qualify as a real estate professional and you're doing a short-term rental, think about the amount of tasks that come into play in between tenants.
Right.
That is very easy to hit your 100 hours. I mean, you're going to be hitting a lot more than 100 hours if you're self-managing that.
Right.
And you're doing everything in between more than any other cleaner that's in there, right? Like you are actually managing the property. Very easy to hit those 100 hours.
So what qualifies as a short-term rental for those wondering?
Yeah. So any guest stay, the average stay of a guest has to be less than 7 days. And so basically what this means is instead of it counting as a rental property, because rental real estate in the eyes of the IRS is deemed passive.
Yep.
Right. It doesn't
generally
matter, right? And unless you're running a short-term rental, that's why they call that the short-term rental loophole, the STR loophole, because the average stay of your guests throughout the year is less than 7 days. So the IRS actually says that's not rental real estate. That's a business. Like,
yeah.
That's
hospitality. That's entertainment. That's
right.
part of taking care of people. It's an active business is the point. And I think the material participation side, even when we're looking at real estate professionals, what the IRS is saying is, hey, you are a real estate professional. Your main job is real estate, and this is a portion of your active job. And when you have materially participated in this is a portion of that active work. And so it's grouping that together. They say generally it's not considered active, but for the real estate professional, the IRS counts that rental real estate as active activity.
Right.
That is counted that way. Same with the short-term rental loophole. I don't like it the way it's called that. It seems like some sort of trick. The point of it is, hey, we are running an active business here. This is not a passive income situation. I'm not just investing and walking away for 3 years. I'm actively running a business, which includes cleaning up between tenants. It includes guests that have requests at random hours of the night. It includes some weird stuff, right?
Yep. And that, I hope you guys are getting the gist of what we're talking about. It really boils down to, like, let's use common sense. Let's not try and fit a square peg in a round hole, right? I'm not trying to make something that is really passive count as active. No, I need to figure out what in my real estate portfolio is considered active and what is considered passive. And then, I need to plan around that. I need to strategize around that. And for where my income comes in, where's my biggest ways to offset my income? Is it on the passive side or is it on the active side? And then look for a strategy and acquire properties that supplement or that help that particular side.
Yeah, absolutely. Got a few more here. I'll cover the hours that do count. If you are doing repairs yourself, if you are doing improvements yourself or arranging those improvements to be done, time spent finding and hiring a contractor and managing them in that role. Even hiring and supervising a property management company. This is one we don't really recommend because it takes away a lot of your time from material participation hours. But there are times when you have a big enough rental portfolio and enough time that you can still spend to materially participate without needing to self-manage, that it could be possible to have a property management company.
Okay.
But it is kind of a tricky one. And we want to avoid the questioning of, hey, they're doing the work. You're just passive. You're just an investor.
Right.
We don't need that to be a question for the IRS.
And if that is the route that you're going to go, like we help clients on there's a lot of nuance to that. There's writing some very specific things in your lease documents, in your property management documents. It's being clear at the roles and the expectations of that property manager, how much hours that they are spending. I mean, you've got to write that stuff and document it in your agreements. And so that's something that we kind of help clients work through. And it's not something that you should probably take lightly and just be like, just tell the IRS if I ever get audited that you worked less than I did, kind of thing. No, it's making sure that things are contractually agreed upon.
Yep. Going even further, purchasing supplies and materials for your rental business, whatever that may be, inspecting the property. This is a good one. I think get you a few hours, depending on the rental. So per door, you see sometimes in lease documents that they'll want to have a quarterly inspection where property management gets to walk through the property and make sure that things are good. We're not doing illegal activities. We have not destroyed the place in between quarters. We're still good to live there without evicting somebody because they're not following the rules. As part of that, we don't want to be nosy and invasive, obviously, as property managers, but we want to make sure that our asset is not destroyed in the process of renting it out to somebody. So that can be one way, and get an hour per or something like that, where you have time that you can spend in that role, right?
Yeah, an hour per quarter per property, right? And so
right.
when we have like 3, 4, 5 properties, I mean that can actually add up in terms of material participation.
Yeah, you got
just
20
in doing
hours.
a quarterly check-in and kind of walk through in your properties.
Yep. Responding to tenant complaints or inquiries, collecting and depositing rents, evicting tenants. Some of those things like responding to tenant inquiries, looking at maintenance, looking at even screening tenants and taking in applications. These are things that really shouldn't take up a lot of your time. And I don't think the IRS would view those as things that do take up a lot of your time.
No.
But recommendation for that anyways, just to make sure that you're compliant, is to have a property management software that can keep all that together.
Yeah, we were just discussing right before we hopped on this live that you wouldn't want to like have communication coming. I mean, in general, for when you manage your properties and you're self-managing a property, you don't want communication coming in from the tenant to your cell phone, text message, to email. Then you also have things coming through their property management software like portal that they come through. And you don't want them sending you mail. There's not like, we don't want multiple streams of communication. So what we typically try and set our clients up with is like, hey, let's streamline the self-management process. Let's make sure that you are hitting and documenting all your hours. We're going to do everything that's required, and we're going to keep it all really clean in a box. Here's the checklists of things that we need to do. And you're going to manage your tenants in a single platform across all of your properties, right? That keeps it very clean, streamlined. Your tenants are going to pay their rent through that. They're going to reach out and inquire about like, repairs that need to happen. That's their main form of communication. And then it's all it's all logged. It's documented. Them reaching out, you spending time. I mean, you could screen record, right, for the amount of time that you're poking around and doing some different things. Maybe not that, you don't need to go that far in detail in terms of documentation, but you spending time in one platform is very helpful for showing like, here's everything that I've done with that property or those properties.
I would prefer passing over a log of that sort over handing my phone over for an audit like that. I don't need people thumbing through my stuff while I do that. So all in one place makes a whole lot of sense. Next one here, evicting tenants. This is something I haven't had to do in anything, but it's something that can be painstaking, and it can take some time and can take some involvement, whether it's filing with the sheriff's department or providing that documentation that's necessary for certain timelines, notices for that tenant. It's something that can take a little bit of time.
Yep. And all that comes with evicting a tenant, most likely the property is going to need a refresh. And so we just had a client go through that recently, where they didn't have to end up evicting. Fortunately, the tenant actually vacated, but it was like they just got evicted. There was stuff still left there. It was a bad situation. They had to go in and refresh the whole thing. And that was a considerable amount of time that they were able to spend doing that.
Easily 20 hours of refresh, clean up, repaint, sanitize, all of the above. It's something that can get nasty pretty quick.
And if you don't want to do that, volunteer your spouse. Right? Because their hours count.
Their hours count. It's really helpful having that help. Yeah, having a +1 is one of the coolest little tricks here.
Yep.
Awesome. Writing and placing advertisements is another one. You get writer's block and you sit there for 10 hours in front of a computer waiting to type 4 words. That's not the trick here. But your time spent placing advertisements was one you were saying earlier. You print out a whole bunch of flyers and start handing them out. You door knock, hey, come live in my place.
I spent 10 hours on Saturday hanging up flyers to go ahead and rent my place out. Yep, hang them up on every telephone pole, and I took a picture of everyone to prove it. No, you don't need to necessarily get that creative, but that's just something that we can use as material participation.
Yeah.
It's dealing with the property, right? It's dealing with the business of the property.
Yep.
Are you materially participating in the business of that property? Is it essential to that? Right. So all these things that have to do with tenants, all these things that have to do with repairs, all these things that have to do with like leasing and marketing the property. Those are you being a business owner, an active business owner in that business, right? Each of these rentals are a business. And then as you group them, those rentals are a business. Okay. We're not trying to make some passive thing active. You're actively participating. Materially participating. There's a difference.
There's a very clear distinction actually in Publication 925 between those two, active and material participation. Material participation is a little bit more stringent.
Yep. Well, cool. So wrapping this thing up, how to maximize an active real estate portfolio to eliminate your tax bill, right? So kind of piggybacking off of our first 2 calls where we talked about the power of being a real estate professional. And all the people who qualify in that, all the people who want to qualify in that, right? There's a lot of people clamoring to qualify as a real estate professional because of all the benefits that come with it, and especially on the tax side and the depreciation, the things that you can do with property. And so the thing is not everyone needs to be active. And we want to be really clear on that. We help people on the active side and on the passive side. And this is where we start with every single client. We sit down and we say, hey, where are your current assets? Where are the current income streams coming from? And we want to map out where you are and where you project yourself to be and build a plan accordingly. Build a strategy around that so that it's optimized for your life. You're not just running yourself ragged. You're not trying to jump through a bunch of hoops. Our job is to make this easier, right? A lot of people are trying to piece this stuff together. They're talking to their CPA who has half a partial knowledge on it, who might not know all of the things that you should do in the real world, how this works in real estate. Right? We're not licensed CPAs, but we're in the real estate world. We know like the actual day-to-day. How should we implement this? And then you might be talking to real estate investors who are doing it, and their way of qualifying is a bit different because they can combine their way of qualifying as a real estate professional and their material participation together.
Yeah. And
so like their way of qualifying is different. So you might see some other videos and some other people talking about this, and the way they outline this stuff is confusing. And so, our job and our goal for all of our clients is not to turn everybody into full-time active real estate investors. Is to find how we can use real estate in the background to benefit you most. And if we can solve massive tax problems in the current real time and set yourself up and your family and bulletproof you in the long run, right? With wealth building and appreciation and principal pay down on your mortgage and all the other benefits that come with real estate. If we can do that and help you sleep better at night as a real estate, not as a real estate investor, as a business owner, we're business owners. We know what it's like to wake up every day and think, oh my goodness, the economy is going to do weird things. Where's my business headed? We had a down month or a down year, right? There's a lot going on as a business owner that you're worrying about. And if you can bulletproof yourself in the background, or maybe you got a business partner, and knowing that your business partner is sinking money into real estate to bulletproof themselves from the risk of the business, right? So like if you do have a down year and you're not able to take as big of a distribution, is their family still going to be okay, right? Well, they're getting cash flow from their rentals. They're building equity. They have assets that they can liquidate. They weren't just blowing all their distribution on jet boats and fancy vacations, right? They were bulletproofing themselves. Yep. And so when you can work together and build trust as a business owner and a business owner partnership, right? There's some crazy things that does to you in terms of your ability to sleep well at night,
Hmm.
and just the confidence. And so when you do these things, we like to talk about all these returns that we can measure, and there's all sorts of them, right? We can measure the amount that we're going to be able to save you in the tax side, that we can measure all the cash on cash returns, we can measure the appreciation that you're getting. We can do those things, but the things that have a lot of weight that can't be measured are the ability to sleep well at night, are the compound effect of doing this over 3, 4, 5, 10 years, and looking at your decision making as a business owner compared to your competition, right? They might have to swing the pendulum at every economic turn that comes their way, while you can remain steady and you can still achieve the goals that you have in front of you, and you can pay your employees on a down year and still feed your family. You can you can still make the payroll on that month when it was a tough thing, right? That goes a long way. And so that goes that we want to talk about that, because those are the immeasurable, the intangibles that are really important, and begin to stack up greatly in your favor when you implement a strategy like this.
Yep.
So let's wrap up right there. We talked about material participation, a really good deep dive into that, what we're going to cover in the future. Our goal with all of our clients is to give them a real clean way to do this. How does this work in the real world? How can this apply to your life? How can you make this simple on yourself? Follow these steps. Here's a guide. Here's how you can self-manage your properties properly. Here's how you can put them in service and make sure you're not, spending 500 hours that you don't want to, right? If you can do it in 100, 101, that's great. Awesome. Let's hit it there, and truly be efficient with our strategies.
And be crystal clear on following the rules. At the end of the day, if we get audited by the IRS, we want it to be crystal clear that we were playing by the rules, and we don't have to go back and pay back taxes on stuff that we should have paid anyways, because we were trying to bend the rules to fit something that we didn't qualify for.
Right.
Yeah.
Right. So we'll leave you with this as we wrap up. If you think you qualify as a real estate professional after watching our last video, we would love to have an exploration call with you, sit down, see if you actually do. What do those requirements look like? Kind of get a feel for where maybe your assets are, and what sort of ability you have to invest in real estate, and where you want to move in that direction. And let's work together. We're helping clients build wealth, reduce their taxable income, and we're doing that every day, and it's awesome. The impact that we're able to make on families and business owners, and bulletproofing them and making them whole in that approach. And if you are a real estate agent, you probably qualify as a real estate professional. Not always, but if you go back to the last video that we recorded and you meet all the specifications that we outlined, then you qualify as a real estate pro. You can use this strategy yourself, right? So the things that we're teaching, we're both real estate agents, the things that we teach with our team and we help clients do, you are also learning to apply for yourself. You should be investing in real estate. And so if this is like, wow, I didn't know any of this, and you're interested for yourself, or you're interested in saying, hey, I would really love to add this as a value add for my clients,
Right.
DM us. We want to grow our team, and we're looking for individuals who are driven, who like and understand investment real estate, who understand the overall power of real estate and how it can impact somebody's lives, and who want to be a part of this, and want to be a part of growing our team, and want to be a part of serving clients at a high level in this capacity. So just DM us. We don't have a super cool, efficient little way for you to go ahead and sign up and be a part of our team. We're real people. We're on LinkedIn every day. This is our main form of communication. Just literally that. Just DM us. So cool.
Pretty easy.
Well, that's it. Well, let's leave it there, and we'll see you next week.
Awesome. Thanks, guys.